Hello everyone. Welcome back. Today, we've got some crucial news you don't want to miss. Let's dive right into the top financial headlines and break down what's happening. Trump's tariff threats shake global markets. What's next? Donald Trump's recent tariff announcements have sent shockwaves through global financial markets, marking the most significant reaction since his election victory. His bold claims impacted global stocks, bonds, and commodity prices, creating a ripple effect across economies. Here's a comprehensive breakdown of the situation and its implications from 4 key perspectives. 1. What did Trump say? According to the Wall Street Journal, Trump's announcement came in a fiery post on his Truth Social platform. He declared that his administration would impose a 25% tariff on all goods from Mexico and Canada, citing their failure to curb illegal immigration and fentanyl smuggling into the U.S. In a second post, Trump turned his sights on China, threatening an additional 10% tariff on Chinese imports. He accused Beijing of not doing enough to regulate fentanyl production, linking the issue directly to his trade agenda. This move signals a dramatic escalation in Trump's trade policies. During his first term, his tariffs on Chinese goods covered about $300 billion worth of imports, with an average tariff rate of 12.5%. This time, his proposed tariffs target all goods from Mexico and Canada, making it one of the most aggressive moves in U.S. trade policy history. 2. Why target Mexico and Canada? Bloomberg reports that Trump's decision to go after America's NAFTA partners, Mexico and Canada, is deeply tied to political promises and the interests of his key supporters. Mexico, the primary target, is Mexico's booming auto industry. Roughly 16% of cars sold in the U.S. are manufactured in Mexico, largely by American automakers like Ford and General Motors, who have shifted production south over decades to take advantage of lower costs. Trump's tariffs aim to reverse this trend and bring those jobs back to the U.S., especially in key states like Michigan and Ohio, where he has strong support among auto workers. Canada, while Canada's auto exports to the U.S. account for a smaller share, 7%, Trump's focus extends to energy. Canada is America's largest supplier of imported oil. Reducing reliance on Canadian oil would directly benefit U.S. energy producers, a core constituency of Trump's political base. Trump's aggressive stance is also driven by a desire to fulfill campaign promises, particularly to blue-collar workers and the energy sector. His actions align with his long-standing pledge to protect American industries from foreign competition. 3. How are these tariffs affecting China and the yuan? Trump's renewed trade threats have had an immediate impact on the Chinese yuan. According to Reuters, the offshore yuan fell 0.3%, hitting a 4-month low at 7.27 against the dollar. The onshore yuan also followed suit, reflecting market concerns over future trade tensions. While a weaker yuan could theoretically boost Chinese exports, it also poses risks. Significant depreciation might lead to capital flight, where investors move their money out of China to avoid potential losses. This scenario worries Beijing, as maintaining financial stability is a top priority. Experts from Nomura Securities predict that if the yuan crosses the 7.30 threshold, it could trigger even more volatility. They advise investors to bet on a stronger dollar, given the expected downward pressure on the yuan. The dilemma for China is clear: devaluation could help counteract tariffs, but it risks alienating foreign investors and destabilizing the economy. Balancing these factors will be critical in the coming months. 4. Wall Street's reaction: cautious optimism. Despite the global market upheaval, U.S. investors have responded with relative calm. Bloomberg highlights that many on Wall Street view Trump's statements as part of a broader negotiation strategy rather than an imminent policy shift. Kevin Lutz, a senior strategist, sees Trump's rhetoric as a tactical move designed to gain leverage in future trade negotiations. By linking tariffs to issues like immigration and fentanyl, Trump positions himself to extract concessions from trading partners. Charles Schwab strategist Kevin Kelly echoes this sentiment, noting that while Trump's threat should be taken seriously, there is still uncertainty about how these policies will play out. He emphasizes that markets are wary but not panicking, as they anticipate a lengthy negotiation process before any tariffs take effect. What's next? Trump's tariff threats mark the beginning of what could be a prolonged trade battle. The stakes are high, not just for Mexico, Canada, and China, but for global markets. While investors brace for potential volatility, much will depend on how negotiations unfold in the coming months. One thing is clear: Trump's second term promises to be just as unpredictable and consequential as his first. Next, U.S. farmers to Trump keep immigration crackdown away from agriculture. A recent Reuters report highlights growing concerns from American agricultural groups as Donald Trump's return to office looms closer. The article, titled "U.S. Farm Groups Want Trump to Spare Their Workers from Deportation," sheds light on how Trump's immigration policies could disrupt the food supply chain, which heavily depends on undocumented workers. The issue at hand. The report emphasizes that U.S. agriculture is uniquely vulnerable to immigration crackdowns. Currently, around 50% of agricultural workers are undocumented immigrants, according to industry statistics. If Trump enforces widespread deportations without exceptions, the agricultural sector, particularly in Republican-controlled Midwestern states, could face a total collapse. Without these workers, farms would struggle to maintain operations, leading to a severe disruption in food production. Farmers are now urging Trump to uphold a previous promise to shield agricultural laborers from large-scale deportations. How farms navigate immigration laws. Farmers have long used creative workarounds to employ undocumented workers without directly violating laws. Many contract labor through third-party staffing agencies. These agencies provide assurances that the workers are legal, allowing farm owners to maintain plausible deniability. While both sides understand the reality, this arrangement has kept the system functioning. However, with stricter immigration enforcement on the horizon, farmers fear losing their workforce. A dilemma for Trump supporters. Interestingly, many of these farmers are staunch Trump supporters. They oppose illegal immigration in principle, but now find themselves in a delicate position, asking for exemptions. Essentially, their message to Trump is, crack down on illegal immigration, but not in agriculture. In Trump's first term, he promised to spare the agricultural sector from immigration raids, recognizing its critical role in the economy. The question now is whether he'll extend the same leniency in his second term. What's next? As the January inauguration nears, farmers are ramping up their efforts to influence the administration's stance. Their plea reflects a broader tension between ideological support for immigration control and the practical realities of running a business. For now, the agricultural sector remains on edge, waiting to see whether Trump's policies will strike a balance between campaign promises and economic necessity. The third piece of news today is about Elon Musk. Could Elon Musk really buy MSNBC? A viral debate sparks buzz. In the past few days, a quirky yet captivating story has gained traction in the US, blending business, media, and internet culture. The Wall Street Journal recently published an article titled "Elon Musk Buying MSNBC?" A difficult feat, because it isn't for sale, which dives into the online frenzy surrounding this idea. Let's break it down. The backstory: Musk supporters want a media power move. Ever since Elon Musk's high-profile acquisition of Twitter, now X, some of his conservative-leaning supporters have been urging him to take things a step further, buy a major news network. Their target? MSNBC, known for its progressive stance and often critical coverage of conservative figures. Calls for this move have flooded X, with users passionately suggesting that Musk could shake things up in the mainstream media landscape. The notion has gained so much momentum that Musk himself has joined in on the fun, engaging with posts and even joking about firing certain hosts. One frequent target of these jokes is a prominent left-leaning MSNBC anchor. Musk didn't hold back, calling MSNBC's pure garbage on the platform. Even Donald Trump Jr. chimed in, publicly encouraging Musk to go for the acquisition. This has only fueled more speculation and excitement among Musk's followers. Reality check: is it possible? While all the buzz makes for good internet fodder, MSNBC's parent company, Comcast, quickly poured cold water on the idea. In a statement, they clarified that although they're considering a spin-off of their cable news assets, their intent is to keep ownership within the company. In other words, MSNBC isn't for sale. Comcast's stance hasn't deterred Musk's fan base, though. On X, users are still busy crunching numbers and offering Musk strategic advice. Many point out that traditional TV networks like MSNBC are declining in value, making it a relatively affordable buy compared to Twitter. Some estimate that Musk could acquire MSNBC for around $20 billion, a fraction of his $340 billion fortune. Musk's potential influence on media. The chatter, even if speculative, highlights a deeper trend: Musk's growing role as a cultural and media disruptor. His Twitter acquisition already sent shockwaves through the tech and media industries. If he were to buy a major news outlet, the implications could be profound. Imagine a network with Musk's unpredictable leadership style and penchant for free speech absolutism. It would undoubtedly upend traditional media norms. That said, it's important to temper expectations. As Bloomberg cautiously noted in its coverage, while Musk might be interested, the likelihood of this deal materializing remains slim given Comcast's firm stance. Final thoughts. Even if this story never moves beyond the realm of internet gossip, it reveals how Musk has become a lightning rod for public imagination. The idea of one man reshaping both social media and mainstream news is as thrilling as it is controversial. Whether he can or should buy MSNBC is beside the point. What matters is how conversations like these reflect the public's appetite for change in the media landscape. As Musk's influence continues to grow, one thing is certain: when he speaks or tweets, the world listens. The fourth message today is about Hong Kong. Is Hong Kong becoming a hub for financial crime? A U.S. congressional warning. A recent Wall Street Journal report has raised eyebrows with a bold claim: Hong Kong is transforming from a global financial center into a hub for financial crime. This assertion, coming from prominent U.S. lawmakers, marks a significant escalation in rhetoric against the city's role in international finance. Let's unpack the key details and their implications. The accusations, from finance hub to sanctions haven. According to the report, leading members of the U.S. House of Representatives, known for their tough stance on China, are urging Treasury Secretary Janet Yellen to reconsider Hong Kong's privileged financial ties with the U.S. Their concern? Hong Kong is allegedly becoming a center for money laundering and sanctions evasion, particularly benefiting countries like Russia, Iran, and North Korea. The lawmakers' letter, which the Wall Street Journal reviewed, goes further. Hong Kong has shifted from being a trusted global financial center to a key player in the authoritarian axis of China, Iran, Russia, and North Korea. They argue that it's time to re-evaluate U.S. policies, especially in banking and finance, toward Hong Kong. A changing landscape, from financial powerhouse to risk zone? Hong Kong's reputation as a global financial hub was once beyond question. But in recent years, its standing has waned due to geopolitical tensions and increasing control from Beijing. Some have even likened it to a financial center in name only, highlighting its diminished influence. Now, with accusations that it facilitates illicit activities, the narrative is shifting from decline to outright concern. Why this matters now? This call for action comes at a pivotal moment. With Republicans now controlling both the White House and Congress, the likelihood of such proposals turning into policy is much higher. In the past, many anti-China bills stalled in the Democratic-controlled Senate or faced veto threats from the president. But now, things have changed. Unified Republican control could mean swift passage of legislation targeting Hong Kong's financial sector. Proposed measures might include tightened regulations on financial institutions dealing with Hong Kong or even sanctions on specific entities. Potential fallout: risks for Hong Kong's financial sector. If these proposals gain traction, Hong Kong's financial sector could face serious challenges. Strained banking relationships with U.S. institutions, which could deter global investors. Heightened scrutiny on transactions linked to Hong Kong, potentially isolating it from Western financial networks. Broader implications for China's financial strategies, as Hong Kong plays a critical role in China's access to global markets. My take: is this a turning point? While it's too early to predict whether Hong Kong will face sweeping sanctions, this development highlights a growing consensus in Washington: Hong Kong is no longer seen as a neutral player. For years, the city benefited from its unique status, balancing ties between East and West. Now, however, its alignment with Beijing is making that position increasingly untenable. The question isn't just whether Hong Kong's financial institutions will face penalties, it's whether global investors will continue to see the city as a safe and stable financial hub. As this story unfolds, one thing is clear: Hong Kong is losing its status as a financial center. Finally, let's turn our attention to another consequence of Trump's tariff threats. Trump's tariff threat halts BYD's Mexico expansion. Recent developments in U.S.-Mexico relations have taken a sharp turn after Donald Trump's latest tariff threats. A high-profile project involving Chinese electric vehicle giant BYD in Mexico has come to an abrupt halt. The news comes just a day after Trump's warning of a 25% tariff on Mexican goods, and it's already causing ripple effects. Let's break down this situation with insights from the Wall Street Journal and a few observations. The Project Freeze, BYD's plans put on hold. BYD's long-anticipated factory in Mexico, meant to produce electric vehicles near the U.S. border, has now been indefinitely postponed. According to the Wall Street Journal, Mexican officials are growing cautious about allowing Chinese companies to set up shop, fearing it could provoke the incoming Trump administration. Here's why this matters. Mexico's dilemma. Mexico has become a key player in the global auto industry, welcoming foreign investments that create jobs and boost the economy. However, allowing BYD to build a factory close to the U.S. border is seen as a potential flashpoint that might anger Trump and his trade advisors. BYD's global stature. As one of the world's largest EV manufacturers, BYD's presence would normally be a significant boost for Mexico's economy. Yet, the political risks appear too high. The politics behind the decision. Mexican officials are now walking a tightrope. While the country has historically embraced foreign investment, the geopolitical stakes are higher than ever. Trump's hardline stance on trade and immigration has already put Mexico in a defensive position, and any moves perceived as undermining U.S. interests, such as facilitating Chinese access to American markets, are being reconsidered. A senior Mexican official put it bluntly: Mexico must present itself as a reliable North American partner, not a backdoor for Chinese goods. My take: the limits of bypassing trade barriers. BYD's attempt to establish a foothold in Mexico raises some strategic questions. Is defiance the best approach? BYD's strategy seems bold, even brash, building a factory right on the doorstep of a country actively blocking Chinese imports. This move feels like a game of brinkmanship that assumes the U.S. lacks the ability or willingness to respond effectively. But as we've seen, Mexico is already feeling the heat and pulling back. The importance of strategy over strength. In international trade, nuance and compromise often yield better results than direct confrontation. China's approach of circumventing trade barriers through third countries might seem clever, but it can backfire if not handled delicately. The abrupt halt of BYD's project highlights the risks of underestimating geopolitical realities. Lessons for Chinese businesses and officials. This situation should serve as a wake-up call. Being smart isn't always enough. Success in global markets often requires flexibility and a willingness to compromise. BYD's halted plans are a stark reminder that pushing too hard, too fast, without considering the broader political landscape, can lead to costly setbacks. Moving forward, Chinese companies, and perhaps even policymakers, need to rethink their approach. Understand local dynamics. It's not just about circumventing barriers, it's about building trust with partners. Be willing to adapt. Sometimes, stepping back or finding common ground can be more effective than pushing forward aggressively. Final thoughts. While the BYD story may seem like a small hiccup in the grand scheme of things, it reflects larger issues at play in global trade and diplomacy. In an era where politics and economics are deeply intertwined, businesses must tread carefully. Success isn't just about innovation or market dominance, it's about navigating complex geopolitical waters with skill and foresight. That's all for today. Thanks so much for watching. If you found this video helpful, don't forget to hit the like button and subscribe for more updates. I look forward to seeing you in the next one.